Morning, guys. It's Wednesday, April 30th, 5:25 a.m. Central Time. Grain markets are mixed this morning. July corn futures down a quarter cent at 4.70. July soybeans down 8.5 at 10.44 and a quarter. July Chicago wheat up 1.5 at 5.27. July Kansas City wheat up a half cent at 5.31 and a half. July spring wheat up 2.5 at 5.95 and a quarter. The corn market got beat up pretty good yesterday. Why don't we start there?
Both corn and soybean futures fell sharply yesterday. The July 25 corn contract dropped 13 cents, closing near 470 per bushel, while the July 25 soybean contract lost nearly 10 cents to settle around 10.53 per bushel. The downturn was driven by an accelerated U.S. planting pace that has pushed both crops ahead of the 5-year average. Futures were also pressured by favorable growing conditions down in South America. SRW wheat futures also edged lower, with the July 25 contract down roughly 6 cents to close near 5.26 per bushel. The decline was attributed to timely rainfall across the U.S. plains and a slight uptick in Russian export volumes.
Yesterday's price action, especially in the corn market, felt like a headline to me. It felt like there was a headline out there, and that's why the market was down. I was calling around, I was asking around, did you see a headline? Did you see a headline? There was no headline. There was no singular headline. I think this was a convergence of a few things. First off, the July corn contract fell below some technical support. You've got this trend line on the chart, and we busted that. When that happened, the selling accelerated a little bit. You've also got month end and first notice day kind of converging here. And perhaps that has resulted in some money moving around. Perhaps the biggest thing, if you had to point to anything, would be weather. We've got a largely uninterrupted U.S. corn planting campaign underway, and we'll get to some weather maps here in a second. So no, there was not one big headline. I think in the case of corn, this is the market erasing some weather premium. This is some first notice day, month end type stuff. It's some technical selling. Funds supposedly were sellers of 30,000 contracts yesterday, depending on which private estimate you'd like to believe, but not the best price action. Maybe now in this July contract, if you guys are watching, you've got a couple different uptrend lines that come in the 458 to 448 neighborhood. Maybe that's where we're headed. Soybean futures were down, but not as bad as corn on a relative basis. 1037, I think, would be your next level of support under July soybeans. Let's talk about weather for a second. I still see this as being just a largely uninterrupted U.S. planting campaign on a national scale. There are areas, of course, with problems. There are areas that have been delayed, but on the whole, we're ahead of average nationally, and I think we will continue to be ahead of average nationally. Rainfall over the next 5 days, you got this band from Texas through Oklahoma, through Missouri, through parts of Illinois and the Eastern Corn Belt, so maybe some short-term delays there. Nothing major, though. And even the 5 to 10 is pretty wide open for a lot of places. If you're to look at this through a different lens, this is a map of from our friends at Crop Profit. Over the next 14 days, U.S. corn country, on average, we'll see 89% of its normal rainfall. So below normal rainfall expected. And that's considered to be a good thing for crop prospects this time of year. The planting season is not the biggest thing in the world when it comes to production prospects, but it absolutely does matter, and it eliminates at least one element of risk.
As part of a new feed saving initiative, China plans to cut grain use in livestock feed to about 60% and reduce soymeal content to roughly 10% by 2030. The move is part of Beijing's broader effort to reduce dependence on soybean imports, particularly from the U.S., amid ongoing trade tensions. In 2023, the soymeal ratio had already dropped to 13%, and the new 10% target reflects China's push for greater feed self-sufficiency. To compensate for reduced grain use in livestock feed, China will increase the use of alternative protein sources such as microbial protein, food waste, insect protein, and animal-based protein. It also plans to boost high-quality forage production by more than 40 million metric tons by the end of the decade.
This is a bearish headline, but this is not why the futures were down yesterday. Let's look at a couple graphics or charts here. China uses 30% of all global soybean meal. They're the top user, 82 million metric tons per year. They are the second largest user of corn domestically, accounting for 25% of global corn consumption, 313 million metric tons. Mackenzie, the things that they're talking about here, we're going to replace these things with microbial protein, food waste, insect protein. And I mean, that's not feasible, is it?
No, absolutely not. You think livestock are going to do good on those kind of protein options? Absolutely not. This is not a feasible plan at all, in my opinion.
That was a real question for me. I don't know anything about feeding livestock. So that
Right,
was,
I know, and I
yep.
appreciate you asking me. No, but I don't that would not be something that I would wanna feed livestock in order for them to thrive and grow and feed my country.
They've been talking about this for a long time. There was a related article that Reuters printed overnight. Perhaps China ramps up GM corn planting, but state controls, patchy trials keep industry guessing. According to this article, 7% of China's corn acreage this year will be GMO, and that's 4 to 5 times more than what they had last year. Apparently, they've got some issues with it. The state is kind of messing with them. The trials haven't been that great. I'm not sure exactly if they know what they're doing or not, or if there are some restrictions in place that will hinder all of this. But it sounds like China talking and not necessarily something that's totally doable.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Yesterday's video with Chris Barron was absolutely fantastic. Transition planning primer. I had a ton of positive feedback here. And actually, the thing that I got back from the most people, which was the most positive, is Joe, can I forward this to my dad? Joe, can I forward this to my son or my daughter? Joe, can I forward this to my cousin or my uncle? That's means that we're doing something right. Chris talked about all of the things associated. Chris works on transition planning like all day. This is what he does. I don't know if there's anybody who knows more about transition planning when it comes to farm operations in particular. There was a lot of things with regard to risk mitigation, how's your business set up, transition structure, all sorts of super interesting stuff. This is highly, highly recommended. There's going to be another like 3 or 4 parts to this. We know this is a hot topic in farm country. It's going to be for a long time. So you guys might want to check that out. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. This is an information only service. We don't want to do your brokerage business. We don't want to sell you crop insurance. We don't want to sell you anything except for our information. We have 2 emails per day. The Standard Grain Morning Update includes everything, recent premium videos, headlines, charts, graphics, cash grain marketing recommendations. That goes out at 5 a.m. Central Time. That day's premium video goes out at 10 a.m. Central Time. Give that deal a shot this morning, guys. It takes about 30 seconds to sign up. You can do it on your phone. We do Apple Pay, Google Pay, Cash App. All of the videos, all the content is super easily accessible on your phone. I know you guys are busy this time of year, but this is actually some great stuff to watch or listen to while you're working this spring.
China is pushing back against U.S. tariff pressure. At a BRICS meeting on Monday, China's foreign minister urged countries not to yield to U.S. tariff pressure, warning that doing so would only reinforce what he called Washington's bullying behavior. On Tuesday, China released a video reaffirming that it will not back down in trade negotiations. This firm stance comes in response to recent comments by Treasury Secretary Scott Bessent, who suggested that tougher trade measures, including potential export bans, may be used to pressure China into talks. While some White House officials have indicated that trade negotiations may already be underway, China has denied those claims. Instead, the nation is demanding mutual respect and a complete rollback of tariffs before talks can begin.
Pretty much the same sort of tone and chatter out of China. I've become exhausted of this. I feel like the markets have too. Volatility in a lot of the stuff, whether it's the stock market or bonds or whatever. The initial shock is kind of past us, and now we've been slightly more range bound. I mean, maybe elevated volatility, but a lot of the markets have really settled down. So nothing new here.
Sovicon has raised its forecast for Russian wheat exports. The agricultural consulting firm expects exports to reach 40.7 million metric tons, a modest increase of 200,000 metric tons from its previous estimate. The increase was driven by a recent moderate rise in export activity. Despite the revision, exporters continue to face headwinds, with profit margins remaining negative since late last year. Sovicon also slightly increased its wheat export forecast for next season to 39.7 million metric tons. Given the ongoing market challenges, a significant acceleration in Russian wheat exports is unlikely.
Yeah, so the bigger point here in this article for me is the projection for next year. They're talking a 10% reduction in Russian wheat exports next year. That's what Sovicon says. Russia is projected to account for 21% of all global wheat exports this year. The marketing year is almost over, so it'll be very close to that. But they're talking 10% decline next year, I think, because the crop is light. So perhaps that opens the door to some other exporters like the United States. U.S. wheat has become very competitive given this recent sell-off. We talked about wheat in a little bit more detail in yesterday's video. Go back and watch that. But we've become competitive. I'd like to see the export business follow.
Amazon will not display tariff charges following objections from the White House. The company had considered listing the additional costs on Amazon Haul, its discount marketplace. However, White House Press Secretary Caroline Leavitt criticized the proposal, calling it a politically motivated and hostile act. President Trump also expressed his displeasure in a call with Amazon founder Jeff Bezos. Treasury Secretary Scott Bessent argued that it would be unfair to highlight tariff related costs when the economic impact of past administrations' policies hasn't been shown in the same way. Amazon stated that it never formally approved this idea and it will not be implemented.
This is part. I don't think this is going to happen, but this is part of the tariffs becoming real. Is that prices of a lot of things are likely to increase if they haven't increased already. And that's assuming that the things with China stay status quo. I'll tell you what, if I was selling something that I imported from China, I mean, you'd have to raise prices. I mean, you'd have to, or else it's just not going to work. Do you tell the customer that I'm raising prices because of tariffs? Yeah, you probably do. You probably do. Amazon, as they're the biggest retailer in the country. If they're not number one, they're number two. It's them and Walmart, I think. I don't think like that's a crazy idea. I just think it illustrates the idea that this is getting pretty real and will get realer as we move forward here.
USDA reported flash sales of corn and soybeans on Tuesday. U.S. exporters sold 5 million bushels of corn to Spain for delivery during the current marketing year, and exporters also sold 4 million bushels of soybeans to unknown destinations for delivery during the current marketing year.
With regard to old crop corn, we're the only game in town. Makes a ton of sense. To see the old crop soybean sales is good because Brazil is a lot more competitive than we are in the U.S. right now. What did cattle futures do yesterday?
Cattle futures were higher once again. Live cattle were 15 cents to 70 cents higher. Feeders were $1 to $2.22 higher. Box beef was mixed. Choice was up $5.49 at $348.26, and select was down $1.30 at $323.82.
Outside markets are pretty quiet. The Dow's off 20 points. The S&P is down 14. Bonds are about flat. U.S. dollars up just a little bit. We've got crude oil down 69 cents in the June WTI at 59.73. Have a great day, guys. We'll be back on Thursday.